How these pre-construction condo investors have made their money. Stay tuned to this episode of Prime Price TV for real-life examples of how investors made their money in the pre-construction market. Good day, Toronto. Welcome to another episode of Prime Property TV. So glad you could join us here. Real estate is such a hot topic and everyone in Toronto is so passionate about it. I love that. What I love even more is that the passionate debates constantly between the bears and the bulls. In every single market, there are bulls, and in every market, there are bears. The bear, it sounds weird already when I'm saying it out loud, but are bearish on the market. Yeah, I know. And the bulls are bullish on the market, thinking everything will be great. It reminds me quite a lot of the debate of Apple versus Android. Both are great platforms of phones, and they both have their own strengths and weaknesses. Having just switched from Apple to Android, don't hate me, Apple fam, I think I can see the merit for both. There are things I miss about the Apple ecosystem and how things run smoothly, and at the same time, there are things I like about the Android system, about the big battery and the customization. So, I digress, but this isn't what I was talking about in this video. The reason why I brought up the phone debate is that I can see the same thing for real estate between the bears and the bulls. Both sides have a very valid argument, and I find it always great to take an empathetic approach and understand both sides before coming to a conclusion. Of course, everyone's opinion is slightly skewed, just a little bit based on their own emotions and ultimate end goals. If you've been priced out of the market recently, you're probably a little bit more bearish in hopes that your market will correct itself so you can buy a home again. Or alternatively, if you're a new investor, you're probably hopeful and bearish that the market will do better because you want your new investment to kick butt. So recently, a headline has taken a life of its own, and I wanted to give you analysis from both sides, the bear and the bulls. The headline says this: condo markets make big gains, but nearly half aren't making enough rent to cover their costs. I've got a lot of questions about this, and it's exactly for this reason why I'm going to be talking about this and give you both perspectives in this video. From a bearish perspective, this article is absolutely correct. I know a lot of pre-construction condos that were launched recently that didn't make any investment sense. I didn't recommend them as investments to any of my clients. When the asking price is way too high for the rent you can get, you're solely relying on capital appreciation to make money. That's risky. That's almost like gambling. You want to buy a property that will be able to pay for itself on completion and not a property that you have to pay into on completion. Being out $500 per month means that you didn't select the correct project and floor plan, which really should you have make more rent than you would pay in expenses. However, because the condo market has been so strong in appreciation and the rental market is equally as strong, these condo investors who took a little bit of risk could potentially win out at the end and look like geniuses for taking the riskier approach to condo investing. From a bullish perspective, when I read the headline, condo owners make big gains, but nearly half aren't making enough rent to cover the cost, I was mind boggled. Because that reads to me, condo investors get rich on appreciation, but are cash flow negative. That has me scratching my head. So I took out 3 pre-construction deals that we're expecting to close in the near future to give you an idea of some real numbers, because what I'm reading and seeing are completely polar opposites of one another. In each example, I'm going to give you the purchase price, the address of the said condo, the purchase date, the layout, and what the expected cash flow is after property taxes, insurance, and condo fees right now. For privacy reasons, the unit number and the purchaser's name obviously are going to be hidden, okay? So example 1, Grid Condos, 181 Dundas Street East. Purchase price, about $342,000 back in August 30th, 2016. The projected cash flows right now, about $326 positive cash flow per month. Current market value, $480,000 or so, and depreciation over 1.5 years, $137,000. It's pretty good. Grid Condo is scheduled to occupy this year in 2018, and I expect rents and prices to increase even more before occupancy. If my client decides to use the den as a second bedroom, they can probably get even higher rent if they rent to students. Example 2, The Met, 7896 Jane Street in Vaughan. Purchase price, $333,000, a little bit less than that. Back in February 13, 2016. The projected cash flow right now is $300 a month roughly, positive cash flow. This unit was recently assigned. Purchasing the condo in pre-construction phase yielded $93,000 in profits over 2 years, or 34.4% return on investment. Pretty good for simply just signing a contract 2 years ago. Even at the new purchase price and the expected rents, this unit is just about to break even on occupancy that isn't happening until 2019. Example 3, Harbour Plaza, 88 Harbour Street, Toronto. Purchase price, a little bit less than $359,000 in November 12, 2013. The projected cash flow numbers on this is $401 per month. Positive cash flow. The current market value is about $540,000. The appreciation over the 4.5 years is $181,000. Harbour Plaza has already occupied, meaning people have moved in. The tenant is currently paying $2,300 a month right now during occupancy. And on closing, my client will have positive cash flow, about $400 a month, and have almost $200,000 in equity appreciation. And here's the bonus and kicker of this. They'll be able to pull out $80,000 in equity and still break even on cash flow with the rental numbers right now. This was an absolute home run. So when I see these articles written indicating condo investors are paying about $500 a month out of pocket in order to benefit from the capital gains of the condo, that makes no sense to me. To me, I'd be bearish if I was in that position as well, just to protect myself. However, on the flip side, if the property pays for itself, like the 3 examples I showed you, I would definitely be bullish because you're protected by your rent, so you're not going to be paying any extra. What condo you invest in makes a big difference. If you're a negative cash flow $500 a month, you may need a new realtor who actually specializes in condo investment and not just someone selling you something to make commission. This is why not every pre-construction condo is worth investing in. Make sure you understand the game and not just blindly purchase a pre-construction just simply for capital gains, because that's gambling. If you're interested in learning more about how to make these returns, you can contact me. I'll leave my contacts over here. Thank you guys for watching. If you learned something in this video, make sure to give me a thumbs up. If you like the content on the channel, subscribe to PPTO channel, buttons right here. If you got any questions or comments, you can leave them in the section below or contact me as well. If you want to learn more about how to make this kind of returns, contacts are right here. Until next time, guys, happy real estating. Oops, I forgot the actual ending.